Hey guys, welcome to another episode of the Block Thresher Crypto Update, where we are shattering the complexities of crypto with news, commentary, analysis, and education. Do you remember the A-Team? I remember when I was a kid watching one episode, or maybe more than one, a few, and it seemed like every episode they would have some kind of situation where they'd roll into a garage, and you weren't exactly sure what was going on in the garage, but they were grabbing this and grabbing that and pulling a bunch of stuff together, and they'd roll out with something that was like the van was now a tank, right? It kind of reminded me of MacGyver, who was always doing the same kind of thing, picking up little pieces of who knows what and building some kind of incredible weapon out of it. Well, today our word of the day is bricolage, BRICOLAGE, which means a construction made of whatever materials are at hand, something created from a variety of available things. And I just remember I used to think that when I was able to watch a couple of those shows from, back in the day. This so much fun. I always like that, the creativity of the A-Team, and or a MacGyver would be another one. I think those have sort of slipped from our popular culture maybe a little bit as of late, but the word is bricolage, BRICOLAGE, and it means to construct something made of whatever materials are at hand, something created from a variety of available things. I also remember one thing that stands out in my mind that would be descriptive or similar to this concept would be I had a neighbor when I lived in Acton, California, just a long time ago, who worked for the telephone company, and he would somehow acquire old telephone poles, the wooden telephone poles, and so he built this house, and it was sort of like, imagine a gigantic treehouse that just spanned a couple of acres, and he would use these really huge, very long telephone poles to create bridges from one sort of like loft. You could imagine maybe like pentagon shaped or octagon shaped lofts that he built out of these things that were 20 or 30 feet up off the ground, with bridges going from each one to the other. And it was actually a really cool place. I think eventually what happened was, at some point in time though, he didn't have permits for any of that stuff, and so they came and they made him tear the entire thing down, and so it was sort of a bit of a sad thing, but it was another good example of bricolage, BRICOLAGE. Hey, today is an historic day for the cryptocurrency market. Overnight, at some point in time, total market capitalization surpassed $2 trillion. That's right. Currently, according to CoinMarketCap, it sits at $1.99 trillion, which is a 2.50% increase. But this is incredible. This is phenomenal. We've been talking about that last couple of weeks. When will we see the total market cap surpass the $2 trillion? And we have just touched upon it. Very interesting to see. Although, what is also noticeable is that it is primarily money that is coming into the altcoins in the market, because Bitcoin is still hovering below $60,000. It is currently $59,710, up 2.11%. About that $2 trillion market cap. There's a story today from a renowned stock picker who believes that Bitcoin's market cap, just Bitcoin alone, not the entire crypto space, will eclipse gold's 10 trillion market cap. And I wanted to just look at that really quickly to sort of put into perspective where the cryptocurrency market is in relation to gold and other things. So this just kind of gives us a little bit of an idea of where Bitcoin could potentially, as a new digital gold, go. It seems that $600,000 a coin is the minimum target for analysts over at ARK Invest. So these guys at ARK Invest, they believe that Bitcoin will match and then surpass the market capitalization of gold. And if that's the case, we're talking about a $10 trillion market cap plus. ARK Invest believes Bitcoin's market capitalization will one day comfortably eclipse that of gold's and exceed $10 trillion, reports the London Times. So there's a couple of other things that are interesting in this article regarding that. They say, if you look at gold as a 10 trillion market cap, Bitcoin is about 10% of that currently. And if we believe Bitcoin is a 100 times better version than that, then it is fairly safe to say that there's a stark chance that Bitcoin captures a lot of gold and gold's market share, and possibly even more. But what about the effect of regulation on the future performance of gold? These guys pointing out that there's that one caveat. What happens? So in response, El Mandra of the crypto of the ARK Invest stated, in regard to what Janet Yellen typically says, because she has stated that it's inefficient, unstable, and often used for legal activity, that being Bitcoin. El Mandra, I think, is how you say the name, said, I really think that it's just outdated arguments as a function of their complete lack of education, which is a function of just their lack of interest in learning about this. And I definitely think I would have to agree with that. Along those lines, another prominent figure, this being the financial historian Niall Ferguson, has recently stated that the U.S. isn't going to ban Bitcoin according to his view. So who is this guy? Recently, renowned financial historian Dr. Niall Ferguson wrote about Bitcoin as part of an article about the future of money. According to the bio on his website, Ferguson is currently the Milbank Family Senior Fellow at the Hoover Institution, part of Stanford University, which is a public policy think tank promoting the principles of individual economic and political freedom. Now, here's some interesting stuff about him. He's also a senior faculty fellow at the Belfer Center for Science and International Affairs at Harvard, and a visiting professor at Tsinghua University, Beijing. Ferguson, who was named in 2004 as one of Time magazine's 100 most influential people in the world, has taught at Cambridge, Oxford, and Harvard. So he published in 2008 a book called The Ascent of Money, A Financial History of the World. This was later adapted for television as a 5-part documentary, and it won a 2009 International Emmy Award for being the best documentary of 2008. Ferguson's most recent comments about Bitcoin appeared in an op-ed piece for Bloomberg that was published yesterday, that being on the 4th, April 4th. So here are some of the highlights and takeaways from what he said. The reasons for Bitcoin's success are that it is sovereign. No one controls it. Not the whales, who own a lot, and not the miners, who mine a lot. Scarce. That 21 million number is final and above all smart. He had a $75,000 price target, but he says for 2018. And this was based on assuming that every millionaire would one day want 1% of his or her portfolio in Bitcoin. Now, he says that price target looks a bit conservative. He argues that Bitcoin is to the system of fiat currencies centered around the dollar what medieval Venice once was to the remnants of the Western Roman Empire, as superior an economic operating system as commercial capitalism was to feudalism. Quite a strong statement there from Alan. He said, although Bitcoin currently looks to outsiders like a speculative asset, in practice it performs at least 2 of the 3 classic functions of money quite well, or soon will. As adoption continues, it can be like gold, both a store of value and a unit of account. Bitcoin is not an ideal medium of exchange precisely because its ultimate supply is fixed and not adaptive, but that's not a fatal limitation. In many ways, it is Bitcoin's unique advantage. Absolutely. Bitcoin and Ethereum, as well as a great many other digital coins and tokens, are stateless money. Stateless, he means like non-governmentally issued and fiat, proclaimed money. And the more they can perform at least 2 out of 3 monetary functions tolerably well, the less that banning them is going to work, unless every government agrees to do simultaneously, which, seems like a stretch. The U.S. isn't going to ban Bitcoin, just tax it whenever you convert Bitcoins into dollars. Absolutely the case. Yes, let's tax it. All right, low volatility affirms 130 Bitcoin target, says a JP Morgan analyst. So I'm just sort of lumping these 3 stories together because they go back to back, hand in hand. A new wave of institutional capital might flood the cryptocurrency industry, according to these JP Morgan analysts, as Bitcoin becomes less volatile. JP Morgan strategists maintain that Bitcoin's recent decline in volatility could attract more institutional buyers. Given the new fundamental developments around Bitcoin, the investment bank reaffirmed its $130,000 target. Even though Bitcoin's price has tripled over the past few months, a particular on-chain metric validates the bullish forecast. So the boys over at JP Morgan Chase are predicting a $130,000 Bitcoin target. Interesting stuff, right? Going back to market prices today. Ethereum is currently $2,134, up 1.94%. Binance coin is just killing it. It's risen 36% in the last week, now up 7.69% in the last 24 hours. It is currently $374.88. Polkadot seen a little bit of an increase, a good increase on the week, also up about 30%. It is currently $44.30. Cardano is up a bit, 3.25. Not much movement on the week, but in the last 24 hours, it has risen to $1.22. XRP being the breakout story. XRP is up 32.24%, up 40% in the last $25. It is now 85 cents, coming in at number 7 in terms of market cap. And this is pretty phenomenal considering everything that's been going on with XRP and the legal issues that it's been having. It is now, this is what's interesting here, it is now back above where it was when the SEC sent out their notification about the charges that XRP was an unlicensed, unregistered security. So for all the people that were hurt by that statement, and they, we've read stories before, $15 trillion or something that investors lost as a result of the SEC's actions, well, that claim can no longer be made. And one of the issues was that a number of holders were coming together in some like joint action to try to get the judges to hear their side of the story. And part of their argument was that they had lost a lot of money due to the SEC's actions. Well, that's been wiped away because XRP is now at 85 cents. So this is incredible. Takeaway here, there's two things that two thoughts regarding this. Number one is negative news could come out about this ruling, such that the SEC, it looks like the SEC is going to win their case, and we could see a significant crash again. So that's a huge risk to factor in if you're going to invest in XRP. One thing to consider. The second thing is that this just shows the resiliency of one of the top 10 cryptos while under attack, essentially, from the SEC. It's still doing incredibly well. Regardless, Uniswap is up 1.32% to $30.90. Litecoin is up 6.65% to $216. Chainlink up 2.36% to $32.21. Filecoin down slightly, $177. Theta up 1% to $11.82. And that'll be enough for our market overview today. All right, moving forward, Bittorrent. I wanted to talk about Bittorrent for just a little bit because it just blew up 60% overnight to set a new all-time high. Let's look at where it is in terms of market cap. Bittorrent is now number 19, up 222%, up 48.33% in the last 24 hours. Over 200% for the week, over close to 50% in the last 24 hours at 0.01236 cents. So Bittorrent has seen this incredible pump. The price of Bittorrent's BTT token surged 60% in the last 24 hours. The surge is part of an ongoing rally. Several new updates to Bittorrent's file system announced yesterday on Twitter could be the reason behind today's growth. Updates include increased decentralization and the completion of a repair node. This is by no means BTT's first price rally. At the end of last month, the token's price surged 80% in 2 days, prompting tweets of joy from the BTT team. So what I wanted to say regarding Bittorrent is this has some of the markings of a pump and dump situation. I'm not going to call it as that, but there's the evidence that I'm looking at is the activity that I am seeing on social media, on Facebook groups and on Twitter, on Twitter, etc. There's definitely been a concerted effort to, respawn people, the DOGE camp of pump and dumpers who are, what's next? What's the next token to get into? What's the next token? And people are like saying, jump into BTT, that's the next thing. So we've got that going on. Some of this might be a social media driven pump. The other issue that I have with Bittorrent is that it lacks centralization in my view because it was purchased by Justin Sun, and I am suspect of anything that Justin Sun does. If you want to understand why, just do a Google search and dig a little bit deeper into what happened with the Steemit project and the Steemit community. And Justin Sun is notorious for using the vast wealth that he's amassed to sort of do nefarious things to push projects to accept Tron. And the other aspect of this is just a technological one where Bittorrent, the BTT token, is a token that is a token that's derived from Tron, but Tron is an ERC20 token, an Ethereum token as well. So there's just some weird stuff going on there. This article talks about it. It says, where does Bittorrent token come from? Most tokens are built around a smart contract template on the Ethereum blockchain called the ERC20 standard, but Bittorrent's BTT token is built in accordance with the TRC20 standard, a similar thing over on the Tron blockchain. This is because Tron, a blockchain company headed by the extravagant crypto fan and big spender Justin Sun, owns Bittorrent. In 2018, Tron bought the popular torrent and file sharing platform for $120 million. Tron has its own currency, the Tron token, known by the ticker TRX, but it's actually an ERC20 token. Confusing? No? Says the article. And yes, it's definitely a little bit of an odd thing, a little bit confusing. So anyway, long story short is, Bittorrent is a great application. They might develop and deliver a phenomenal product for file sharing and peer-to-peer networking, that sort of thing. But I'm just leery of it because of who the founder, not the founder, the owner now essentially is, and the team behind it, and just some of those technological issues. It might be a great opportunity for a short-term play, but over the long term, I would want to dig in a little bit deeper for sure before I would invest in it. But right now, where things sit, I'm just apprehensive about it. That's really all I want to say about that. Glassnode unveils massive whale accumulation of Bitcoin in spite of rising Bitcoin price. This is just some good news from the analysts over at Glassnode about where they think things could go and what the data is showing them. New analysis from crypto intelligence company Glassnode is revealing massive whale activity amid Bitcoin's meteoric ascent this year. The on-chain analytics platform looks at Coinbase, which it labels as the preferred venue of U.S. institutions to accumulate BTC, to show the rapidly dwindling Bitcoin balance on the crypto exchange. According to Glassnode, whales started to heavily accumulate Bitcoin in December of 2020 as BTC threatened to take out the previous all-time high of $20,000. We can see that in December 2020, the game changed as BTC price approached the previous cycle all-time high at 20,000 and market confidence grew. Serious institutional accumulation commenced. This started with 37,400 BTC withdrawn in December. So they've produced a chart that shows the balance of Bitcoin at Coinbase, and there's just this huge drop-off starting in December, going down. I mean, it's almost like the inverse of what's happened with the market, but it's actually steeper, it's sharper, and that's sort of the point they're showing, is that more and more crypto is being pulled off those exchanges in large amounts by institutionals. So it's a great thing. In the months that followed, an incredible stair-stepping whale cost averaging pattern emerged as tens of thousands of coins were accumulated each month. The consistency, frequency, and size of this balance change are astounding to see play out in on-chain data and really shows the aggressive accumulation by institutions this year. Glassnode's chart reveals that U.S. institutions continue to be a major force behind the current bull market as they take out thousands of Bitcoin in spite of Bitcoin's rising price. In the first 3 months of 2021, 170,800 Bitcoin were withdrawn from Coinbase, and Bitcoin's over 100% surge from 28,873 in January to 58,618 at the time of writing. U.S. institutions are not the only big-time players who are accumulating Bitcoin. Quant analyst Lex Mikowski shares data from Glassnode showing that the Bitcoin miner net position has turned positive, indicating that miners are holding more Bitcoin than the amount they are selling. So they're no longer selling it as they mine it. Grayscale confirms it plans to convert its Bitcoin Trust, that GBTC, into an ETF. Now, why would they do this? They would do this because it would allow them to grow this thing bigger, and it would bring in even more institutional investors, which would be good for adoption. But there's also a couple of other benefits that would come from this, and for users, that is, and that is that in the trust, the way it works now is you have to lock in a certain amount for a certain amount of time, right? And then the fees are notoriously high for the GBTC, for the trust. And with an ETF, the fees would be lower. It would have to be lower in order to be competitive, and there would be no locking in. So it would be more liquid. You could pull in and pull out more easily, which would be, again, something that would be appealing to the institutional investors and bring in more. So we just wanted to mention that quickly today. MicroStrategy adds another $15 million worth of Bitcoin at the $59,339 price. So, boy, just demonstrating that they are not waiting for the market to drop. They're just doing sort of the dollar cost averaging. That obviously this was other people's money, and again, that illustrates and demonstrates just the long-term confidence that Saylor has in where Bitcoin is going, and we're just going to keep bumping. We're just going to keep buying and buying and buying and buying. And so they just did that with another $15 million worth. Really, really cool. All right, one last thing that I just want to talk about with you guys today, and this is just another article that was on Zero Hedge talking about inflation. This is from Egon von Greyers via the goldswitzerland.com, and he's just bringing a lot of data. He's talking about how inflation is coming. Inflation could be coming. Saying there are, of course, other real assets like land and property that have held their values. He's arguing in favor of gold as a hedge against inflation, of course. He works for a gold company, so that's something to keep in mind as you look at this data. But overall, I think the things that he's pointing out here are it's just some solid data, and the conclusions are good too. So I was going to just share it with you guys quickly. As we expect major inflation in food prices, agricultural land is likely to do well in coming years. As I've pointed out in recent articles, we are already seeing high inflation in agriculture and other commodities. See the chart below. Yeah, so it's almost, exponential, except for copper, which is rising just slowly, but lumber is just off the charts. And I've been hearing that from another of contractor friends who are trying to do projects, wood flooring and houses or decks and things like that, and they're just like, it's unbelievable. We've got a 4x, 5x, 6x. I don't know where we're at now, but it's kind of off the charts. But the same for soybean, corn and wheat, which are being listed. They are also significantly rising. Bond yields do not reflect the massive risk. So commercial and residential property is a different matter. The incessant creation of credit since 1971 has driven property prices even higher, and we see that markets are starting to reach all-time highs. In addition, central banks have given borrowers the best leg up ever by charging virtually nothing for money. In Switzerland, for example, you can get a 15-year fixed mortgage at a fixed rate of 1%. This is like handing out free money. But low interest rates in no way represent the generosity of governments or central banks. Instead, it is the consequence of their profligate spending. With incessant deficit spending, governments must finance the new debt at virtually no cost to avoid default. That is why we are seeing 18 trillion of negative yield government bonds with no Western borrower paying above 2% for any maturity. How absurd rates are is reflected by for example, Greek versus U.S. rates for 30-year bonds. Greece just launched a 30-year massively oversubscribed bond issued at 1.95%. For comparison, U.S. 30-year bonds yield 2.36%. Both these borrowers are virtually bankrupt, but it is absurd that a very financially weak Greece can borrow at a lower rate than U.S. Yeah, definitely. Unbelievable. So the government bond market is the biggest bubble of them all, and that won't stop it from expanding further. Just take the U.S. This is some data that just is mind-boggling. When Trump was elected in November 2016, U.S. debt was $20 trillion. Based on history, I forecast that it would reach $28 trillion in January of 2021 and 40 trillion in 2025. At the time, most market observers found this forecast preposterous, but sadly they hadn't studied history, which told us what would happen. U.S. government debt, now he's estimating, will be $50 trillion in 2025. Based on the current situation of the U.S. economy and forecasted deficits and credit expansion, $40 trillion in 2025 is too low, and we are now looking at a U.S. debt of $50 trillion. For historical perspective, the author points this out. Remember that when Reagan took over in 1981, U.S. debt was under $1 trillion. $1 trillion under Reagan just 44 years ago. Now the debt is forecast to hit $50 trillion. You see what's going on here? You see what's happening? That is an astounding compound annual growth rate of 28%. 28% every year of U.S. debt between 1981 and 2025. And this figure doesn't include potential defaults in credit or derivative markets, which could increase the $50 trillion exponentially. Whew. Man, total U.S. debt of $84 trillion can never be repaid, and nor can it be serviced at non-manipulated market rates. When bubbles burst, the domino effect is incalculable. In addition to debt default of tens of trillions of dollars, derivative defaults, which are very likely, could add 100 of trillions and more. He says, I'm sure that the Fed and other central banks are already cranking up the printing presses or expanding the memory of their computers to cope with all the additional zeros. All right, I'm just going to wrap that up there. He goes into giving some more data as to what can happen as we potentially could trend toward some hyperinflation, some stories about how that happened. There's the $500 billion Yugoslav dinar note. Ultimately, the conclusion here is that there's a lot of warning signs that inflation is coming. Now, whether that's going to turn into hyperinflation or not, who knows? But for those who are in the cryptocurrency space, who are holding these deflationary assets, it's all good news. And I just present these arguments sometimes to you guys because they are compelling reasons. These are some of the reasons. These are the things that we can speak to friends and family about because they see it and they're going to continue to see it more. I've been having people call me constantly, conversations with people about, man, these stimmy checks that keep coming out are definitely a bit of a wake-up call to people. They start saying, well, wait a second, where's this money coming from? How's this working? And I think more and more people are starting to question these things and say, what's the impact going to be? And immediately, it's not that hard to make the argument, and the conclusion is easy to come to. They can jump to because they see it when they go out and buy things that prices are getting more expensive. So it's great to be, on the one hand, for a lot of people, they think, oh, great, I just got this money. But, I spoke to someone just the other day who didn't know very much about economics at all, but was able to draw the simple conclusion that, like, I better spend my stimmy check right away because things are getting more expensive. This was like not a person that's into finance or anything at all. Just very anecdotal observation, though, came to the right conclusion and said, look, I better spend this stimmy check as soon as possible because prices of things are getting more expensive and it's not going to buy me as much 6 months from now or a year from now if I try to save it. And that's how the entire system is designed and it's built, to disincentivize saving and to create velocity of money to because that, in the Keynesian view of economics, is building wealth, is when people go out and spending. We've got to spend in this debt-driven society, and most people are locked in and trapped in to month to month, living just month to month, hand to mouth, barely getting by. And as these prices continue to rise and that squeeze comes even more if their incomes aren't rising to match, it can be tough times going forward for people, right? But initially, a lot of people, they feel pretty good about things right now because the economy is getting that injection from the stimulus happening and whatnot. But the impact, and that's why I'm reading these articles to you guys, is because as that money keeps getting injected into the economy, it has to have the influence that it will raise prices. And so we're pushing problems down the road essentially, and making things okay now, but they're going to be so anyway. I digress. Enough about that. All right, friends, thank you so much for your time. I hope you have a phenomenal day. Remember, it's always a great day to earn and to stack more crypto. Thank you all. Talk to you tomorrow. Have a great day. See you. Bye.